we shall have discussion forums, we shall have the online chats, we shall have some assignments, we shall have the cards. So it will be an interactive session like the normal session. And then we are not close to ideas. So if in case you have an idea or something in mind that we can use to make our classes as interactive as possible, you can share with us, and I'm open to such ideas. I shall adopt them. So I shall be taking the attendance like in a normal class. You've seen under the welcome note there is an attendance, a class attendance. I'll be taking the class attendance normally. And then for the next class, I would urge you to join via the what we are calling the web cam. You can share your webcam so that we have a video. Because in the next class, I'll be teaching some computation, some the real accounting. Because for today's, it will be just an introduction. We shall be looking at the basics of introduction. So I think I'm clear. I can see two mics which are on. That is for Everin. Everin, am I audible?
Yes.
Okay. Aridian Motei. Nico Chonjo. Ridian?
Yes, I can hear you.
Lilian Motei? Lilian? Yes, Lilian. Lilian has gone away. Amenda chenye magic. Okay, but it's okay. I'm hoping that you can hear me. Then, oh, she has gone offline. Then, on your left hand side of this big blue button, there is somewhere it's written public chat, like where I had written good morning, and Lilian replied good morning. If in case you cannot be able to hear me, or there is something that is not clear, you can be using that public chat, and I'll be seeing your conversation, or I'll be seeing your points. So, and I'll be acting immediately. I'll see that one. So, if your voice on the other side is not clear, please be using the public chat, and I'll be responding. Or if it's a query, you can also use the public chat. If it's something that is not clear, you can also use the public chat. Then, in addition to that, these particular classes are recorded. So, if there is something that you didn't understand, or that something that you didn't capture well, you can still go after we are done, maybe 30 minutes after the class is over, and you shall find the discussion that we had during the session, and you shall find what we discussed, maybe, and you'll be able to get areas that you didn't get. So let's now start. We can now start, and we shall be looking at this thing that we are calling fundamentals of accounting. And when we talk of fundamentals of accounting, when we talk of the fundamentals of accounting, we are saying that this is the foundation of accounting. And therefore, we shall start by defining the term accounting. This unit, that is fundamentals of accounting, will be building what we refer to as the basis of accounting. So it will be helping you to understand accounting better. So, if you want to be an accountant, this is now a good time that you create your foundation. You create a basis through which you can build your career. So that's when you talk of the fundamentals of accounting. So let's start by defining what accounting is, and we see what it entails. So when we talk of accounting, we say that it is the process of identifying, measuring, and reporting economic information to the users of this information so as to permit informed decision. Yes, accounting is not an event, it is a process. And we are saying that this process usually starts by identifying an account, maybe an economic activity. Then after you have identified the economic activity, you measure this particular activity, and in this case you give its value in monetary terms. Then after you've measured this particular economic activity, you proceed by reporting this. And in accounting, we shall be reporting in what we refer to as accounting statements. All accounting statements, or what we shall be calling the financial records or accounting records, like a receipt. I know most of you have had maybe a transaction and you are given a receipt. When you usually get to the shop or to get to the seller, and he sells to you a certain item, and you agree on the price and you buy the item, they will give you a receipt. That's an example of an accounting transaction or a business transaction. Then let's look at something else, that is the business transaction, or something that this thing that we are calling accounting or business transaction. What is this business transaction, or what is this accounting transaction? So when we talk of business transaction, we say that it is an event which involves the transfer of money or money worth financial events. So when we talk of anything in business that money exchanges hands, that's what we refer to as a transaction or accounting transaction, whereby money is changing hands. That's what we're referring to as accounting transaction. Then we move on, and you can give an example of an accounting transaction. I have given you an example of someone buying goods in a shop. Or maybe when you are also selling some services, like you are a customer to Zetech University, you usually pay school fees. When you pay school fees to the university, that will be a business transaction. When you pay the school fees, that's a business transaction. When the supplies, when you are supplied with some goods, maybe by your maybe by KPLC, by the water supplier, by maybe you are the Safaricom or any other service provider, that one we refer to it as a business transaction. So that's when you talk about this a business transaction. Okay, there is someone's. Okay, let me mute the user. Oh. Okay, yes, I've controlled the meaning, the echo. So please be ensuring that your mics are muted so that you can have a good conversation. So that doesn't talk of a business transaction. So and we say that the purpose of accounting is to keep information that will permit informed decision to the users. And when we talk of helping to have an informed decision to the users, this is when we talk of the accounting information is not prepared for the purpose of it or just for the sake of it. We prepare accounting information for some, so that someone can use the information, and once they use the information, they will make decision out of the information that has been provided. Like for example, when as customer, A customer will be looking at a business transaction or business information or accounting information to make a decision based on it. Maybe to either to know whether the business will be providing the goods they buy or whether the business will be in operations or not. That's when we talk of the users of that's when we talk of the usage of the accounting information. Okay. Um, let's now move on now to these users of accounting information. Just like I had preempted on this, when we talk of the accounting information, it is not prepared just for the sake of it. It is prepared such that someone can use the information. And this someone who uses the accounting information is whom we refer to as the users of accounting information. So let's see who are these users. User number one is the owners of the business. So the owners of the business, it's someone who starts the business or who has invested in a business. Like for example, if you talk of a sole proprietorship, that is the business that is owned by a single individual. That's when that's the sole proprietor of that particular when of the owner will be given of examples of a sole proprietor. We have other businesses like a partnership. A partner is also an owner of the business. When you talk of companies, when shareholders are the owners of the business because they are the ones who have invested in such a business. So that's when we talk of the owners of the business. And then they don't use the information for the sake of it. We have to ask ourselves, why do they use the accounting information? For the owners of the business, they usually use this information um, for the purposes of decision making. They will use the information for the purposes of decision making and also identification of business operations and how they are going. Like, for example, the owner of the business will use the accounting information to know how much profit the business is making, or how much is the investment that he has made in a business. So that's when you talk of the owners of the business. Number two, you on the users of accounting information is the customers. Customers are the people who buy from the business. Like when we talk of like an example, maybe when you go to a shop or a supermarket, the people who buy from the supermarket are the customers, and they usually use this particular information so as to understand whether or to know whether the business will continue providing them with the goods they buy or not. So customers will use the information for the purposes of making sure the business supplies them with the goods or not. That's when we talk of doesn't talk of the customers. Another user of this accounting information is the government. The government is interested to know in knowing whether the business will provide it with tax or not. Because if a business is profitable, the government will tax that business, and the taxes are source of the revenue to the government. So the government will be interested in knowing whether the business will be able to pay the taxes, and if yes, how much will they be able to pay. Another users of this accounting information is whom we refer to as the suppliers. When you talk about the suppliers are people who sell goods to the business. and these people uh, are interested in knowing whether the business will keep on buying from them or not. And in some instances, you know, some businesses may buy goods from suppliers on credit, and therefore, when these particular individuals will have the books of account of the business, they will also they will also be interested in knowing how much whether, sorry, not how much, whether these people will be able to repay back the goods that they will be supplied to on credit. So that's when you talk over the suppliers. Another user of this accounting information are readers. Readers are people who usually provide capital or finances to the business. And these individuals usually are interested in knowing whether if they led to the business, whether the business will be able to pay back the money that they have given them, together with the interest that they will charge them. That's when we talk of the lenders. Then the other user of this accounting information is the employees. When we talk of employees, we are talking of the people whom are the people whom are employed, or they provide labor services to the business, and these people are usually usually are interested in knowing whether the business will continue uh, providing them with uh, employment services or not. So that's when that's when we talk of the employees in a business. And also, employees stake in a business mostly is salaries that salary the salaries that they were getting from the people. So individuals will be interested in knowing whether the company will continue, whether the company will continue paying them the salaries or not. And also, it provides them with a mechanisms whereby in a mechanism whereby they can be able, be able to maybe negotiate for better employment terms. So that's when we talk of that. So those are the users of the accounting information. Proceed. And we have looked at the users of the accounting information, and we've also seen why they usually need this accounting information. Now let's look at accounting concepts, conventions, or principles. So when you talk of accounting concepts or accounting principles or accounting conventions, we are talking of the basic assumptions that underlie the periodic financial accounts of the business enterprises. So when you talk of the concepts and conventions, we are talking of some basic assumptions that are taken into consideration when accountants are preparing their books of accounts. When these financial accounts of business enterprises are being prepared, so there are some assumptions I'll put across, and these assumptions usually include the going concern concept or convention. And we say that with the going concern, we are saying that the business will continue with its operation. The business will continue with its operation are for an unforeseeable future. For unforeseeable future. So what does this mean? It means that the business will have no intention to close its operation or to stop its operation. So it means that when the books of accounts are prepared, the accountant or whoever is preparing these books of accounts has nothing in mind that tells him that the business will shut its doors maybe tomorrow or any time soon. That's when we talk of the going concern. Number two, we have what we call the accruals concept or the matching concept. So when you talk of the accruals concept or the matching concept, it means that the revenue and cost are recognized when they are earned or incurred and not when money is received or paid. What does this concept mean? So when you talk of the accrual concept, these accrual concepts mean when you have incurred an expense, that's when it starts to be recognized. When you have earned an income, that's when you start to recognize it, and not when money is paid for an expense or when the money is received for an income. Let me give you an example of what that means for both income and expenses. Maybe, for example, if I give you a job today and we agree with you that I'll be paying you 10, let's say 100 shillings per hour, and you work for 5 hours. So it means that but at the end of the 5th hour, you can ask me for your 500 shillings, even if I've not made the payment to you. That is now an accrual concept for income. For an expense, like for example, I know maybe some of you may be living in rented houses. And when the month has ended, the landlord usually comes for their dues. Even if you have, or they can even they can ask you to give them their money, even if you have not given them their money, or they can count you as someone who has a debt or who owes them some money, even if you've not paid them. So that's when we talk of the accrual concept or the matching concept. So that's when we talk of that. The other concept or principle or convention is what we call the prudence concept. The prudence concept. So we are with the prudence concept, we are saying that where there are alternative procedures or alternative variation, the one that is selected should be the one that gives the most cautious presentation of the business, financial position, all results. So, what we are saying in this, I know you know this particular saying that kuna njia nyingi za kuua panya. Unaweza nunua mtego wa kuua panya, na unaweza hata choma nyumba uwe nini panya wakufe. So in such a case you usually use the method ya kuua panya ile ina manufaa zaidi. So the same case in accounting. If there are more than one ways of presenting the accounting information, you usually select the most or the best way possible. That's when you talk of the prudence concept. That's when you talk of the prudence concept. The other concept that we shall have is the consistency concept. When you talk of the consistency concept, what we mean is where there are how you do business should be consistent or should be the same throughout the year, throughout a certain period. Like for example, if we talk of seats like the chairs and you consider them as assets, tomorrow you cannot consider them as liabilities. So you shall continue looking at them as assets. So that's when you talk of consistency. And if there is a method that you have used to prepare books of accounts today, that method should be observed or should be followed throughout the process. That's when you talk of the consistency concept. You are following the same way, the same route, any time. The other one is a business entity concept. Business entity concept. What we mean by this? When we talk of business entity concept, this is where a business is treated as a separate entity with the owner of the business. Like, for example, if I have a shoe selling business or shop, that business should be separate from the Kinuthia I am, because that one is an entity different from the owner. That's when you talk of business entity concept. The other one is the money measurement concept. Money measurement concept. When you talk of money measurement concept, what we say is that in accounting, all the assets, liabilities, anything in accounting that we record in financial statements shall be recorded in monetary terms. Like, for example, if I have a shop and I have 800 packets of unga, in that particular shop, I will be talking of a shop that has not 800 packets, but I'll be talking if one packet goes for 100 shillings. I'll be talking of in my shop, I have flour valued at 80,000 shillings. That's when we talk of money measurement concept, whereby we say that the assets or the business or there is for financial statement information is presented in monetary terms. So that's when we talk of money measurement concept. That those are just some of the concepts that you usually have in in a in a business. But there is another one that because we shall be using it, let me mention it, which we refer to as duality concept. Duality concept. And I want you to understand this one better. And I want you to listen to it because this one will be used in a whole topic. And it is very, very important. So when we talk of a duality concept, we say that business or accounting transactions are twofold. When you talk of accounting transaction being twofold, what this one means is, if, for example, we undertake a transaction, any transaction, that transaction will affect two or more other accounts, or yeah, two or more accounts. Like, for example, if you buy a laptop today, that particular business transaction, that is the purchase of a laptop, will have a twofold theme. One, if you buy it by cash, it will affect the cash account, whether it is personal cash account or business cash account, because the cash itapungua. Then you shall have acquired an asset called laptops. So when you be counting your assets, you shall say, my assets have increased by this much. So you can see it is a single transaction whereby you have bought a laptop by cash. but it has affected two accounts. One account is the cash account, and the second one is the laptop or laptop asset account. So that's when we talk of the duality concept. Are we together, class? Are we together? Yes, I want to hear your response. Yes, Lydian, I see you are the only one who has the mic on. Are we together? Are we moving on together? Yes, Lillian. Yes. Are we together? I can't hear you. So the others, you can also use the public chat so that I know whether there is whether we are moving on well. And if there is any question, that's why I said you activate your microphones. The lights the users in mind. So even if I present information and I tell you the owner has 10 wives, so you'll ask me, so what? How does it relate to the business? So that's when we talk of that. Okay. The other one is reliability. When we talk of reliability, we are saying that accounting information is useful when it is free from material error and bias, and it can be depended upon by the users to represent uh, the current or the current position in the business. Yes, when talk of a business information being reliable, this is when the information in a business can be any user who comes across the information can make decision on that particular information. So when rely of the accounting information, that anybody can make a decision based on the information. That's when we talk of the reliability of that one, meaning that it does not have errors. It has been presented independently. The information has been represented faithfully. Not that maybe I'm giving some of the data based on my own things. I am presenting my own things, but not the actual things. So when the accounting information is free from errors and bias, that's when we can say it can be relied upon. The other one is comparability. Comparability. Yes, when we talk of comparability, we say that a good accounting information should be capable of being compared with other maybe businesses, financial information. It should also be capable of being compared with, let's say, the previous or continuous business maybe operations. Like for example, if I prepare a profit and loss account, the account that I prepared, I should be capable of being compared with other business maybe in the same industries, maybe with what we had prepared in the previous years. That's when we talk of comparability. So that's when we talk of that. Then the last one is what we call clarity. A good accounting information should be clear. You should be able to understand it with very well. It's the information is precise. Anything that has been presented in those particular information it can be understood well without any challenges by any users of this particular information or any intended user of this accounting information. So that's when we talk of they use the qualities of accounting information. So that marks the end of that session on the users on the qualities of accounting information, and it marks the end of our first session. So I'll be giving you some question in the discussion forum that I will attach, and I don't know whether I I can see I only have the two of my students, and they are supposed to have more than 10. So I don't know what is the stand of the list. Should we start the second topic, or I should give you some break, then we come back and maybe do an introduction? Evelyn. Evelyn? Oh, she's gone. Lillian, what is your take? Kelote, Whitney? Okay, let's two. I'm only the others have gone. Okay, let's first of all have the discussion forum. Go to the discussion forum.